Hi, thank you, Susie, for taking my call.
Anytime, girlfriend. What's
yes,
up?
my husband and I love your show. We respect your opinion and advice, so that's why we wanted to talk to you.
You know, it's always good when a woman who's married, her husband likes me as well, because then we're making finances a family affair, and then it makes your life a lot easier, don't you think?
Amen, I agree.
You got it, sister. What can I do for you?
Okay, currently we have 2 universal life insurance policies. However, we're concerned in having these policies because lately we've been hearing that they are maybe not the best policies to have, but we're not hearing why. So we wanted to ask your opinion and advice on why these policies are maybe in question, and are there any risks associated with the universal life, for instance, 40 years from now?
Here is what you need to do. More than even ask my opinion or other people's opinions, because just so you know, I am not a lover of whole life, universal life, variable life. In fact, if I probably had a top 10 hate list of certain investments that I hate, that would be pretty close up there. I want you to go and look at your actual statement, because the real truth is contained in the numbers on your statement. I want you to look at how many years you and your husband have been contributing money to this universal life policy.
Okay.
And then I want you to look at the cash value of that policy today.
Okay.
How many years ago did you do this?
Well, the one policy we have, we received it back in '98.
All right.
And it's the universal with the cost of living benefit increase.
Oh, well, zippity-doo-dah. Because truthfully, when you go and look at how much is actually in there, cash value, not accumulated value, cash value of what you could pull out right now, I will bet you dollars to donuts, and those donuts could be Krispy Kremes if you ask me, because that's the only good thing we're going to be eating here. Really, you will find that you do not have as much money in that policy today and the cash value portion of it as you have actually put into it.
Oh, I see.
And that is why many people do not like it. Also, mortality charges as you get older in a universal, variable, or a whole life policy go up, because the closer you get to the point of your death, the more they charge you for the insurance portion of this policy. When interest rates are this low, when the returns on the stock markets and bonds are this low, the return that they're able to give you is absolutely nil, number one. And number two, the cost of insurance for many of these companies is going up and up, especially since baby boomers are getting older and older.
Exactly.
So you will look on this policy projection that you have at the guaranteed projection, what this policy will be worth, guaranteed, not the projection of it, but the guaranteed values when you are 70 years of age, and I bet you're going to see it's zero. So you are far better off. If you want insurance, get term insurance, invest in investments like mutual funds and stocks, and stay away from universal life. Take a look at it. If you need other insurance, by the way, get that term insurance in place before you cancel your universal life. Once it's in place, then cancel.